Good to have you on board, Mr. Sehgal. To begin with, let's talk about your profitability because that's been clearly impacted by the slowdown in the industry. How are you trying to bring in efficiencies during a time like this? How are you looking to optimize your cash flows?
So I think the difficulty in various markets are evident, and I think there's no point in repeating that. But in spite of that, if you look, Motherson numbers are very much on the upside. Our turnover is up 14%. Our results cannot be really compared to the last years because of different accounting treatments have changed. Also, I think we have two new plants, the main plants of Tuscaloosa and Kashkamet. So these two are showing certain reactions to the market or to the government conditions. So we do have some losses over there. But in spite of that, this is the third quarter running where we have crossed 16,000 crores on the top line. And we have S&P level, the revenue growth is more than 35%. So I think if you look at the wiring harness side, PKC has done phenomenally well. MWSI has done very well. And under the conditions, even Motherson in India has done very, very well. So really nothing to complain about. Under the conditions, really good results, I think.
Now, let's talk a little bit about the stock movement. And the fact is that in the last 1 year, we've seen the stock decline nearly 40%. We've got global and the domestic business profitability, which has disappointed a bit. So can you tell us what message you have for investors? How much longer do you think that the pain will persist?
So I'm sure all the governments are really looking at the automotive in a very close manner because, automotive is a huge grosser. It involves almost all the industries. You look at oil, you look at steel, you look at copper, I mean, anything and everything. You look at banking, you look at servicing, every single thing, automotive is a very, very huge consumer of that. So I think the governments are very concerned and they are looking into the matter. But I think the environmental stands that have been taken by the government are things that they can't compromise with. So I think they're finding a route by which I think all of them can both sort of coexist. And also the quality of the air and quality of the environment is very, very important, and I agree with that. So I think they will take all the right decisions. So maybe another quarter, maybe 2 quarters, maybe 3, I don't know. But I think the pain is showing, and the governments are all very, very alive to this pain.
Right. So what is Motherson Sumi's near-term focus, and how is it that you're trying to counter the slowdown?
So I think, Motherson is very focused. Our cash flows are very, very strong. Our profitability is maintained. And we are seeing huge opportunities for companies where we can buy them out or we can work together with them. The customers are telling us, because they are very worried about it, so the customers are telling us to look at many, many of the companies. And we are looking at that side of it. So we think there is going to be a tremendous amount of opportunity in the next quarter or so.
Right. So are you suggesting further diversification or inorganic growth plans that could be on the cards? Anything that you can share with us at this point?
Absolutely. I think that's the other part of it. While our operations and the teams that are looking at the operations in a very, very sustained manner, they're making all the efforts to improve the profitability, the quality, and also rearranging the plants. Because in these kind of slow times, you can do a lot of plant maintenance, you can do a lot of things which will be ready when the strike back comes. When the order comes in, at that time, you have no time. So they're preparing on all that. While all of us are looking at a lot of the things which the customer is asking us to look at, where the companies can be bought at very, very low valuation. I mean, you're telling me about Motherson's valuation. You'll be amazed at what the overall valuations are in the world.
In the previous global cycle, how much time it has taken for automobile industry in your company to recover?
So it depends, because these challenges are new. There's really no history of these kind of severe challenges coming. all at the same time, or what people say perfect storm. So I think it could be anybody's guess, but my personal feeling is it's not going to last too long, probably maybe 1 quarter, maybe 2 at the max.
So are you adjusting your capacity utilization to lower levels in order to adjust to the global slowdown? Several component suppliers had to hive off staff. Are you also looking at downsizing?
So I think we don't believe that we have to let go our people. Maybe that is the only way or something like that. There's a lot more that we can do. So we are keeping our stance of breathing with the market. While there are people who are leaving for other reasons, we just don't hire it over there immediately. But we have not let go a lot of people or anything like that globally.
Right, and investors are increasingly concerned about the slow ramp-up of S&P's new plants. Are you in a cash conserve mode in order to tide the slowdown?
Absolutely. I think the conservation is a very, very important thing over there. But look, you have to understand what happened in S&P. So S&P, this particular plant, got caught in the crossfire of trade wars and many other things and all that. So it was just bad timing, thing that I can't control at all. And with the result, we couldn't send our people from various parts of the world into USA because suddenly they had tightened up the people who are coming into US. So be that as it may, we can't give excuses. In Motherson, we have a clear thing of not giving excuses to anybody. So we've managed it. I think every month we see an improvement happening over there. And I'm sure in the coming times, you will see it's phenomenal. In the sense, S&P actually has grown more than, I think, 23% in just quarter on quarter. So I think all these particular things tell you that, when the things will become right, you'll have fantastic results.
Right. Earnings visibility, Mr. Sehgal, as per analysts, is still pretty low because of the global auto down cycle. Have you altered or felt the need to adjust your ROCE and 2020 year-end targets because of the global environment and uncertainties which are prevalent?
So, we are a company which doesn't lower the targets just because the market is tough. We believe that our people must come up with that particular targets are made once for 5 years, we'll stick with that. And that's how we can measure ourselves to that target. We are still maintaining that we will probably do our this thing much before the end of the year. But again, if the thing is right, our target is very clear, 18 billion at 40% growth. If I can see that, I'll do it. And believe me, there are a lot of companies that are available out there just now.
And finally, by when will the capex cycle be complete, and what is your plan for your debt?
So I think our debt is very much reasonable. A slight increase is visible at the moment in the numbers that we have given, but that could be because of the euro and the dollar becoming stronger, because we have to report it in rupees. So I think our debt, we are very, very comfortable with it. We are still, I think, much less than 2 to our assets. So really not a concern. We have enough headroom. We can collect a lot of money. We can do whatever we want. And believe me, a lot of opportunities. So that's very exciting.
All right. Appreciate you taking the time out, Mr. Sehgal, and joining in with a view on your quarterly earnings as well as your plans going forward. With the index